AI is growing too fast. You have to focus on the leaders, not the laggards.
It's a week of growth stocks seeing big swings in both directions.
They just reported blowout earnings the other day. The stock is up another 30%.
Legendary trader Tim Sykes shares his take on 3 winning growth plays retail investors should follow.
I'm looking for momentum. I'm focused on the future. I'm focused on the technology, but they have to execute.
He's also sharing the 3 growth companies he's staying away from right now.
AI is the hottest sector. If you can't be executing in the hottest sector right now, I'm not interested.
It's a roadmap for how you can find growth without getting burned. Let's dive in. Tim, so great to have you back on the show today. Thank you so much for your time. I know you are in the market every day looking, and really your specialty is day trading. So you are doing videos like this every day. So we're so thankful for your time today to come on our show.
Oh, for sure. Thanks for having me.
Speaking of day trading, there has been so many swings, especially in some of these growth companies that a lot of our viewers have been following for a while. Is this good news? Is this bad news? What do all of these big swings mean during earnings season?
It's all hands on deck right now for the economy, and we're firing on all cylinders. You have a lot of new technology. You have crypto, you have AI, you have robots, so there's multiple revolutions going on. The question is valuation. But last time, we talked about how sometimes you just have to lean into the growth and lean into the momentum. Since then, a lot of the biggest names like NVIDIA, Palantir, they keep going. So for me, I'm still trying to ride the momentum, but I'm still a little cautious because we've come very far, very fast now in the past few months.
Yeah, very far, very fast is a good way to look at what has been happening in the market this year. And speaking of being cautious, we have 3 growth plays that you are sharing with us today that are ones you want to ride, want to continue to follow with momentum, but also 3 growth plays you don't want to chase right now that would be good to get out of. So let's get right into your list right away. What is that first company that you're looking at as a growth play you want to follow right now?
Yeah, so SOUN is the ticker. They do AI, but specifically for sound, and they're using a lot of voice AI applications for restaurants. So you might think that you're talking to a human when ordering, over the phone, but really a lot of these restaurants are getting into automated technology, and SOUN leads the pack. They're signing up restaurant after restaurant after restaurant. They just reported blowout earnings the other day. The stock is up another 30%, but they also have a lot of doubters, and a lot of people aren't really sure about voice applications. There's been a lot of promise for voice applications, revolutionary voice applications for many years. All have failed in the past, but SOUN, they're hitting their numbers. Restaurants are signing up. There's also a lot of other industries that are signing up. So I think this could just be the beginning of the voice AI revolution, and SOUN is the leader.
Let's talk about the dip that SoundHound had, back earlier this year where they were up in the 20s. We had some, viewers on this channel who were excited about this company then and got in when it was high. And now it's pulled back so much. Even with this recent big boost, almost up over 50% in the last 5 days, it's still not to that high that it saw a few months ago. What's behind that volatility and how long could it take to get back to that high?
Yeah, look, it's all about valuation, and everyone's excited about AI and the potential, but I think it got ahead of itself for several months, and then it came all the way back down. They have a lot of short sellers. Like I said, there's a lot of doubters, so the shorts really pushed it down, and now it's up, like you said, 50% in just a few days because they came through with their earnings report. So for me, I'm focused on the future. I'm focused on the technology, but they have to execute. And this latest earnings report showed that they executed, so I'm giving them a chance.
Giving them a chance as a long-term investment makes a lot of sense with the potential future here, but also curious, what about the trading plays on this one? I know that's your specialty. You are really in the market day trading every day. You coach people on it, and you are so good at finding these huge 50% swings before they happen. But I know you don't do it alone. You have a tool that helps you, and it's a tool that you share with the investors that you coach. We'll share more on that later on in this video, but I do want to share a link and a QR code now with our viewers if they're interested in learning more about how you find these trading swings before they happen. And that really is the big question with SoundHound here. Are we just seeing a lot of traders really boosting the stock price right now because of this big swing? Or is there truly a lot of that long-term investing interest in SoundHound?
I think it's a mix. I think that's why, we saw such a powerful upswing on this latest earnings winner. A lot of people are trying to position for the future using this new technology. But at the same time, the stock is way off of its highs. So I think you had some dip buyers and long-term investors, and, that power combo has really propelled the stock.
Very good. Well, let's get on to the second company on your list of growth stocks that you want to get into right now.
Yeah, so USAR is the ticker, USA Rare Earth. I mean, you could just look at the company name, and sometimes you have to be like a Neanderthal in the stock market. Like if a Neanderthal were investing, and if a Neanderthal were thinking about what are the major trends, like rare earth metals, big deal. Buy USAR. And that's the kind of thing where, they don't have a big business, but they have cornered the market specifically with their name, USA Rare Earth Metals. So it's a very big picture kind of idea, but rare earth metals are heavily in the news all the time. It's a very difficult geopolitical situation between US and China, two of the world leaders that require a lot of rare earth metals. So these guys are small, just a $2 billion company, but they've been coming up, and they've been coming up in a lot of discussions. So for me, this is just a trend play. And, all the technology that we have, it demands rare earth metals, and these guys have it. So I'm watching the stock, and I think it can keep going.
With trend plays like this one, trends can, get popular and then they can totally fade away. Is that a potential with this one, or is there some long term, hold in this one as well?
I think there's a possible acquisition later down the road by some tech company. For now, it's just a trend play. It's in the news. It's being talked about nonstop. The chart is breaking out. I would caution against chasing it up too much, because now it's up nearly 60% year to date. But at the same time, they are pushing to new highs all the time. So if I could choose what I wanted, I would like a little 10-20% dip to get in at lower prices and then try to ride the trend up. But this stock does have volatility. It's in the news. I'm looking at it.
Very interesting. Well, let's get on to that third company that you're looking at right now.
Yeah, so this is Fubo. FUBO is the ticker. And they've been around for a while, but they never really made their Fubo TV applications really work again, except this latest earnings report. So like SOUN, they blew out expectations. Not a huge amount of growth, but they're trying new technology, and a lot of the new technology is really being used, and they're getting a lot of repeat customers. They really spiked big on the latest earnings, and I think that momentum can keep going as they introduce more apps and more technology. So not quite the high revenue growth yet, but they're growing in terms of technology and what that technology can do in the future. And, sports betting is always hot. DraftKings just got valued very heavily too. So I think this is kind of an ugly duckling, undervalued play in that sector.
Yeah, has this one seen the same kinds of spikes as the other two growth plays that you've talked about, or is this a better buying entry point to get in?
Yeah, I mean, it's kind of in the midpoint right now. It's in the threes. Just recently, it hit the fives, and it's up from the one. So it's specifically in the midpoint. But again, I'm looking for momentum. And I really like this latest earnings report. I like the reaction. I like the numbers. I like their users, who are really happy with their new offerings. So again, I don't want to chase anything up too high, but right now it's in the midpoint. So this is more of a value play than SOUN or USAR, which have both spiked dramatically in the past few days. So I think this one has better risk reward at the current prices.
As it looks like your three growth plays to follow are more those that have a lot of momentum right now. We have a lot of investors out there who are looking at buy the dip opportunities right now, too, looking to find some value and growth in the market. But there's three growth plays that you're saying, stay away from these right now, especially as you might be tempted to buy the dip. What's that first growth play that you would stay away from right now?
Yeah, I mean, BBAI, Big Bear AI Holdings, this has been an AI runner in the past, but they just got crushed on earnings. The stock is down nearly 30%. They missed big on revenue. Their conference call was not very positive. AI is something that we're all hyped up about. Everyone's excited. But if you miss your numbers and you're not as hyped up as your competitors, there's a big problem. And BBAI, has spiked big in the past, but it's always had some kind of problems. And now the problems came to a hilt, I think, in the latest quarter, and everyone is just selling. I mean, for an AI company to be down 30%, I think this is probably the worst performing AI company after earnings. So I know people are tempted, like, oh, it's a 30% off sale, but this is not like your favorite sweater on a Black Friday sale, right? Like, you wait for the Black Friday sale, you get that sweater 30% off. It's the same sweater whether or not you buy it on Black Friday. When a big company, especially an AI company, drops 30%, there is a lot of selling, and that throws everything into question. AI is the hottest sector. If you can't be executing in the hottest sector right now, I'm not interested.
This is interesting, and I kind of want to do a little case study right now because SoundHound had a moment like this. SoundHound had that sell off. They had that stark drop, and now they're back up again. Is that possible for BBAI's future, or is the concept enough to carry this company forward, or is there some fundamental in BBAI that has you questioning whether this is going to rebound in the future?
Yeah, I mean, look, it's always possible for a company to turn around. I mean, the fact that SoundHound did it, that's fantastic. But as AI matures, every quarter matters more and more. And if you can't execute, again, I'm just not interested in the stock. Maybe 2, 3, 4, 5, 6 quarters from now, maybe they can get their mojo back. But for right now, they're dead in the water, and I'm just focused on the momentum. AI is growing too fast. You have to focus on the leaders, not the laggards.
Really good advice for investors out there. Let's get to that second company, maybe in a different sector, that you're telling investors if you're looking for growth, this is not where you want to find it right now.
This is a different kind of company. The ticker is VERB, Verb Technology. They try to work with companies, and they're trying to work with like TikTok and social media. And they have like this little, camera and this little video in the corner of your app or in the corner of your website. And it really just hasn't taken off. And now they've kind of pivoted, and now they're trying to raise, $500 million for a cryptocurrency treasury. And this is a very common strategy with struggling companies. They're trying to latch on to the momentum of crypto. Again, any crypto company could take off. Crypto is hot, but I have big problems with this company and their execution, and their ability to execute in the future. So I think they're just going to keep pivoting and pivoting, no matter whatever trend is hot. And I just don't think they can execute. So I would not be a buyer of this stock.
What has the stock price been doing recently for this one?
So the stock price has been all over the place. I mean, it was at $5 a share when they had their online apps, and they're trying to make a go of that. Then it shot all the way up to $20 a share on the pivot to the crypto strategy now. Now the stock is down to $15 a share. So it's still towards the high point of its recent range. And again, I have a big problem with companies that cannot execute. If you just keep pivoting, then okay, maybe your stock price gets rewarded. Maybe you can raise money. Maybe you can fool a few investors. But I have a long memory, okay? And I remember, I mean, they've pivoted, I don't know, 6 or 7 times over the years. Not once have they been able to execute. So I'm not a short seller. I don't think short selling is good in this market. But if I was a short seller, I would be shorting this company just based on how bad they've been in the past.
That was going to be my next question is this a more day trading play? Can you expect more big swings coming for this company?
Yeah, I'm sure they're going to announce more, pivots and more positive press, and that can always spike the stock. But again, from an investing standpoint, you get these quick pops. Maybe you can sell into them if you're quick, if you're a prepared trader. That's fantastic. But a lot of these crypto treasury plays, they announce a huge war chest to buy crypto, and then the stock just tanks. So not all these crypto treasury plays are worth buying, and this is one that I would avoid.
Very good. Well, let's get to that last stock on your list of 3 growth plays to avoid right now.
Yeah, so this is 180 Life Sciences, up 60% as we're filming this. They just pivoted to crypto, and they just actually got a big investor in Peter Thiel in the Founders Fund. So some big names here, and that gets people excited. But, if you look at how Peter Thiel and a lot of the Founders Fund and a lot of these big VCs act, they're in at such lower prices, and they structure their deals where they always have, kind of like gravy coming in. They get to basically choose their deals because any company wants these giant billionaires and these big VCs to invest in them. So while the stock is up 60%, and, I think it probably could have a little more momentum as more and more people learn about this new investor, I would be very, very careful. This is very late in the game with these crypto treasury plays. A lot of the VCs are just chasing alpha. A lot of the VCs and a lot of the big funds are falling behind crypto. They're falling behind the major market indexes. So they're trying to structure these financial engineering deals, and it works out for them. them, but for people who just buy the public stock, they usually get left behind.
That's really interesting. Also, looking at this one specifically because it is a momentum play right now. It does have that pop that you're talking about. Are there any crypto stocks like this that you would suggest, or are all of these plays something that investors should be cautious of because what comes up might come down in this sector?
Yeah, I would be very cautious on crypto. We've had a good 3 years. We have broken to the new highs, albeit not like as huge of a breakout as many people expected. I would love crypto at 1 million. I think a rising tide lifts all boats, but I just see a lot of positive catalysts and very little percentage gain in cryptos. I think it's just late in the cycle. And we know from cycle after cycle with crypto, it can spike 3 years in a row. And then year four is usually a big down year. And we're coming up on year four right now. So I would be very cautious. I think that there still might be a little more upside, maybe a few months, maybe a few more weeks, but history is a good guide with crypto. And while it might be the future, while it might do very well in the coming years, you always have to watch out for that big one down year. And I think that's really coming on the horizon soon.
Yeah, preparing for those big swings is definitely what you do best, even on the day to day. You are so good at getting to these companies before it hits that really big swing up or swing down. How are you doing that? And how can other investors kind of follow what you're doing?
Yeah, well, I have help. AI and crypto, it's not just a technological revolution, it's also a financial revolution. And my team and I have developed this AI software called XGPT that basically crunches all the numbers. I'm not that great at math personally. XGPT is. And so it's alerting me every single day to these momentum plays. And sometimes I don't even believe it. The other day, it alerted the stock for like the fourth day in a row. And I was like, no way, this stock can't keep going. And it kept going. And actually, it's on day 6 of its run up. And it just blew my mind that I think that robots and AI are getting smarter. They're getting infinitely better all the time. Like this year is going to be the worst year for AI and robots because it's only going to get better in the future. So I think that everyone should be using these new tools, not just trading the stocks of companies in the sector, but actually using these new tools to get ahead. And, as much as some people don't like AI, they're like, it's all about humanity. We don't want machines. Machines can crunch numbers better, faster, more efficiently than us. So I'm just looking for help all the time. And this has really kind of been like my unfair advantage in the past few years.
Yeah, I think that's the unfair advantage that a lot of investors are looking for right now. It's why we're talking about growth stocks today, because so many investors are looking for those big growth stories. They're looking to get into the SoundHound before it hits that 50% pop. Is that what this tool really provides for investors who follow your program and who get access to this?
Yeah, 100%. I mean, that's how I found SoundHound, like right as they were reporting earnings, and I bought a small stake and it kept going. This is what I do. I'm being aided by the hot market. A rising tide does lift all boats. But my true unfair advantage, whether it's fair or whether it's unfair, I mean, that's debatable. This advantage is real where I get alerts faster than people can keep up. And I think that's only going to get better. We actually just released a new version of XGPT, which is 16 times faster than the previous version. And this has only been like 2 years since we released the last version. It's been in development for several years before that, but it's going to keep getting better. And I, for one, am very excited to keep using this new tool.
Awesome. Well, thank you so much for sharing that with our viewers. If you are interested in learning more about getting these fast alerts and getting ahead of the curve, you can scan the QR code now or click the link we have in the description of this video to access Tim's newsletter and this tool that he has for investors who follow him. Tim, you are so well known for your trading expertise and you coached so many people through the years. So thank you for bringing some of your knowledge to our viewers today. We really appreciate you.
No, it's my pleasure. I think this is a great market for prepared traders. You can really ride the momentum. And even if you have a small account, because of the volatility, because of how many cross currents we have going on right now, you can really grow your account and grow your knowledge account too. You have to learn from every single one of these runners. That way you get better over time.
Yeah, good advice for investors out there. Well, let us know what you think in the comments. Are you following any of these growth plays? Are you staying away from some of the names that Tim mentioned today? We'd love to hear from you in the comments. Thanks again for joining us, everyone. And as always, happy investing.